a huge trade deficit with China. That's supposedly the reason why the US is slapping tariffs on $60 billion worth of Chinese imports. But is that right? The US says the trade deficit with China hit a record $375 billion last year, but others are less sure. China is known as the great assembler, the factory of the world. So while it might put together an iPhone, the parts are often shipped in from overseas. The factory itself just picks up a small fee, a few percent of the final price. Trade figures don't show that. They show the US imported a smartphone from China. Reflecting this, Oxford economics say the real goods trade deficit is not $375 billion, but more than a third lower, at around $239 billion. It's an accounting problem that has the groups like World Trade Organization looking at changing its methodology. The figures also don't take into account the huge profits made by US subsidiaries in China. Last year, Ford sold more vehicles in China than back home in the US, but because the cars are built and sold locally, they don't show up in trade figures. Added together, US subsidiaries had total revenues of around $223 billion last year, enough to nearly wipe out the trade deficit altogether. So is the data right? Not always. It's not just China who the US has a trade deficit with. Algeria, Andorra, Angola, Armenia, and Austria, to name just the A's. Rich countries, developing countries, Asia, Africa, it doesn't matter. The problem then isn't China, but maybe US industry. In the past decades, American businesses have looked to boost profits by transferring manufacturing out to cheaper countries. Shoppers are always going to care for price. If the US cannot compete, the answer is to give consumers something they want to pay for. Or as Joe Kaeser, the Siemens CEO, said recently, and I quote, "I believe people should not confuse the lack of competitiveness with unfair trade. If companies lack competitiveness, they need to invest in innovation in order to catch up." Or maybe the answer is simple. Americans just like to buy more. One thing not talked about much is the US surplus in services with China. Last year, China imported $255 billion more services than is exported. Much of that came from the US. Between 2006 to 2016, the service trade deficit increased more than 3,000%. So is China putting up barriers? No, of course not. In the last 2 decades, China has opened 120 industries related to service trade for foreign investors. More opening up is to come in the finance industry, telecoms, healthcare, education, and elderly care. China has also cut red tape, made procedures easier, or scrapped them altogether. Why? Free trade brings jobs, investment brings jobs, tariffs don't.